Welcome to Quick Bite, your fast and friendly Florida insurance
Hello. My name is Roshonda, agency owner of the Isom Insurance Group right here in the sunshine state of Florida. Back again for another Quick Bite episode, your fast and informative insurance market update. Today is Thursday, October the 9th, 2025, and we're talking about a word that sounds complicated but affects almost everyone who's ever filed a claim. It's called subrogation. Now, don't worry, I'll make it simple. It's what happens when your insurance company pays your claim and then goes after the person who actually caused the damage. Sounds technical, right? But it can decide who pays if you get your deductible back and even how much your premiums cost later. Let's break it down with real examples in plain English. So I'll be using this Yahoo Finance article to help reference in this video about subrogation, which is subrogation is when your insurance company steps into your shoes after paying your claim to recover money from whoever was really at fault. Imagine this. You're stopped at a red light, someone rear-ends you, your insurance pays to fix your car. Again, you have to pay your deductible under your collision coverage. Then later, your company goes after the at-fault driver's insurance to get reimbursed for what they paid you. That's subrogation. According to the Yahoo Finance article, subrogation helps insurers control costs and keeps premiums from rising too fast. It's basically your company saying, hey, we paid for this, now the right person should too. Here's how the process goes. You file your claim, your insurer, which is your insurance company, pays to fix your damages. Then your insurer tracks down the at-fault person or their insurance company and files a subrogation claim. If they recover that money, they may also refund you your deductible, depending on your state and policy. So how this works, how I've seen it work with claims is it helps you from being delayed and you recovering getting your vehicle repaired, trying to wait for the other company. So you pay your deductible. The insurance company goes after the at-fault party's insurance if they have insurance, or goes after them directly. But if they have insurance, as soon as their insurance company reimburses your insurance company, they always pay you first any out-of-pockets you had, such as out-of-pocket deductible and any out-of-pocket rental. So sometimes there's something called a waiver of subrogation. That's when one party agrees not to pursue anyone else after a loss. You'll see this in contracts or leases, like between landlords, tenants, or contractors. It sounds nice, but sometimes it means your insurer eats the cost, and that can lead to higher rates later. So why should you care? Because subrogation affects your deductible, your claim timeline, and your premiums. When your insurer, which is your insurance company, successfully recovers money, you might get your deductible back. When they can't, that money is gone. And when insurers recover less overall, those costs get spread across everyone through higher risk. Always remember, insurance is a pool. It's based on the pool, so everybody shares in this pool. So if your insurance company is able to get money back versus when they paid out money, that helps keep the cost of what they paid out lower because they recover a lot of the money back. Industry groups estimate insurers recover between $15 to $20 billion every year through subrogation. That's money that helps keep premiums from going even higher. So yes, it matters. Let's look at a few easy examples. You're driving down South Florida Avenue in Lakeland. A driver on their phone runs a red light and hits your SUV. Your insurer, which again is your insurance company, pays for your car and a rental. Then they go after the other driver's insurance. Months later, they recover the payout and mail you a check for your $500 deductible. Or maybe you're a homeowner. Your neighbor's plumbing leak floods your floor. Your insurance covers repairs. Then your company files a subrogation claim against the neighbor's homeowner's insurance. If they recover, you get your deductible back. Or picture this: you hire a contractor. Their subcontractor damages your AC system, but your contract had a waiver or subrogation clause. That means your insurer can't recover from the contractor's policy. They have to eat that loss, and that could eventually raise everyone's rates. Be careful when you're signing these forms with contractors. A lot of times they put a subrogation clause in those forms. You may not want to sign that form because you don't want to sign over your right to be able to recover if they do something wrong or cause damage. If you do sign that over and they cause damage from the work they're doing, your insurance company, you have to pay your deductible, and you waive your right to be able to recover your deductible back, or for your insurance company to recover any money from their negligence or their shady work. Let's clear up a few myths. Remember, I'm the myth buster. Haven't done that in a while. Myth 1, subrogation means you have to sue someone. Not true. Not true. Your insurance company handles it. Myth 2, it doesn't affect me. It absolutely does. If your insurer, which again is your insurance company, can't recover losses, it affects everyone's premium. Remember, insurance is a pool. Myth 3, it only applies to auto insurance. Nope. Subrogation happens in home insurance, renter's insurance, even health insurance when your company pays medical bills after an accident that wasn't your fault. Subrogation keeps the right people paying, the ones who caused the loss. Or in simpler terms, you break it, you buy it. Here in Florida, subrogation follows the same rules but has a few extra details. Your insurer, again, that's your insurance company, has to notify you if they plan to pursue recovery. And if they get money back, they have to refund your deductible in proportion, basically your fair share. So if they recover half the amount they paid, you might get half your deductible back. Most carriers, they pay the insurer first. Like, they'll pay you first. So if they only recover $1,000, but the damages were $2,000, your deductible is $500, they usually pay you the $500, and they'll just keep $500 and eat the loss. It's not perfect, but it's a fair system that keeps everyone accountable. Now, this brings us to the end of the video, and you know I would love to hear from you. If you've ever had your deductible refunded after a claim, or gotten a letter saying your insurer was going after someone else, drop your story in the comments. Also in the comments, drop any topics you would like for me to cover in any future episodes. You'll be surprised how often this happens, how often subrogation happens. It's kind of a normal practice. And remember, new Quick Bite episodes drop Monday through Friday at 2 p.m. Eastern. The information in this video is for educational purposes only. It's not legal, tax, or specific insurance advice. Please consult a licensed insurance professional about your unique situation. Don't forget to hit that like button, share with friends, family, relatives. And again, drop comments below any topics you'd like for me to cover in any future videos. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching, and I'll see you next time. Stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.